Good morning, everybody. This is Mark Boardman. It's around about 9:30 now on Friday, the 31st of August. I'm just doing a very quick summary of yesterday's trading room trades. I didn't get time to do this video last night, so yesterday was Thursday the 30th. Okay, so I'm just going to go through Thursday the 30th trades. Can you see them here? Okay, we've got a -6, a -22 and a +47. I also want to talk to you about a trade I entered on Tuesday here, which I exited this morning, and that was at 176 profit. Okay, currently we're at 174 plus for the week, but let's just quickly go through these three here. Okay, we'll start with this US dollar CAD short, which was a small 6 pip loss. If we look at the chart here, the signal came in due to this indicator here called the fat man. This is the fat man that tells us whether a currency is about to reverse or not and go the other way, and therefore give us a new trend. I call this the FX trend catcher because this indicator is the first step in a three-step process that gives me new trends. The yellow line here is the Canadian dollar, and at that point in time, this light blue line, I hope you can see that, this light blue line was heading south. Okay, so I was looking at that to say, okay, so we've got a strengthening Canadian dollar about to strengthen. That's the key here. Whenever these lines hit the bottom or hit the top, they almost always snap back. So about to strengthen, US dollar weakening. So that suggests a US dollar Canadian short. Now, as it happened, this US dollar moved abruptly here. Can you see that spike? So we were stopped out the trade. However, what you'll notice with this system that I use is that your losers are always relatively small compared to your winners. Why? Because the volume price analysis software works out whether or not there's really buying or selling volume coming in, and whether or not the trends are going to be sustained. If you see here, this is the only software, as far as I know, I mean, email me at mark@hawkeyemt4 if you know any better, but as far as I know, this is the only software that can take your tick data and turn it into net buying or net selling volume in Forex. Consequently, this trend here, where I entered the market here, I was stopped out of it very quickly. Alright, that kept my loss to a mere 6 pips. Alright, so that was that trade. We had another loser here. Now this isn't one I placed in the room. I placed this earlier yesterday morning, but showed the trade because it was going all day. And this is the New Zealand dollar versus the Canadian dollar here. And similarly with this one, we had a signal to go long. I'll just show you why that was. That was here. We had the dark blue line, can you see, on the 4-hour fat man, alright, suggesting that the New Zealand dollar is going to strengthen and the Canadian dollar is going to weaken. Okay, now this is a different trade in the sense that the one I've just talked to you about with the Canadian dollar strengthening was in a lower time frame. I just want to show you here that you can have currency strengthening in one time frame and weakening in another, and that's absolutely fine. In this particular case, as you can see, the yellow Canadian dollar here, it eventually started to turn round, and so consequently this long here, where we got the green volume, the green heat map and the green trend dot came in, but we were stopped out quickly again. Alright, and that's why we ended up with a 22 pip loss on a 1-hour chart, which is the sort of level you can expect on a 1-hour chart, around about the 20 pip loss when you do lose. Now the key, the number one key, I mean, there's probably 20 things you need to be aware of. I'm guessing the number 20, by the way, but there's quite a lot of things that you need to be aware of to be a successful Forex trader. Let's just say there were 20, and let's say you give every of those 20 points a rating, and you added those ratings up. Well, if you added from number 2 to 20 together, even those points together wouldn't equal how important the first point is. So the number one reason that traders don't make money, and therefore the number one thing that traders have to do to be successful, is you have to ride trends longer. Now that's the bottom line with this system. Alright, so let's have a look at a couple of those. Here's a 1-minute trade where we made 47 pips on a 1-minute trade, which I called in the trading room. It was the euro dollar here, can you see? And those of you in the trading will see I got the signal on the fat man. The green line, which is a euro, was right at the top. The light blue line, the dollar, was right at the bottom, suggesting a reversal here. So this was an uptrend, and this was going to come tanking down. That was a 47 pip move. Now, that's the key to making money in Forex. It's not the small losses. You're going to get losses in Forex. Okay, it's going to happen. You're probably successful Forex traders that I know get between 5 and 7 out of 10 trades correct. I know successful traders that only get half of them correct, but the key is that the ones they get correct, the winning pips and total is always greater than the losing pips total, and that's what we've got on the spreadsheet. This is last week here. Can you see 160 pips made? Look at the winners. You got a 54 there and a 36. The biggest loser he's had was a 22. Alright, a 54, a 20, a 17, a 36 and a 25. The biggest loser was a 22. The other losers was an 8 and a 7 and a -2 there. Can you see? This week we've got a 47. I'm just about to show you a 176 pip win, and your biggest loser is a 25 there and a 22. So riding these trends is the key. This is the trade here that I've been in since Tuesday, closed out this morning. If you can see here, these indicators are uncanny at knowing when a trend is going to end. Lots of traders all over the world would have been out of this trade many times over. Can you see it here? That have been using moving averages, MACD. There's only one leading indicator that can tell you whether there truly is net buying or net selling volume in a market. If it's net selling, it gets you out of the market. If it's net buying, it keeps you in the market. Look at this indicator here. It's not gone red all this time. So only at this point, when the market closed below this cross, are we exiting the market, and that was earlier this morning for 147 pip, 176 pip loss. So we're 174 up for the week. This week we did 160 last week. And we've still got this morning's trading room to go, so hopefully I'll see some of you in today. That's Friday's trading room, and I'll do a summary